the itch in your trigger finger. You feel it now, don't you? That restless energy that crawls under your skin as you stare at the screen. The numbers flicker. Green. Red. A stock you've been watching makes a sudden move, and a jolt of pure adrenaline shoots through your veins. Your mind screams, "This is it. The move is starting without me." You feel the crushing weight of being left behind, the agony of missed opportunity. So you jump in. You buy. You must do something. Anything. Because inaction to you feels like failure. This is the siren song of the market, the sweet melody that has lured millions of traders to their financial ruin upon the rocks of haste. You are not unique in this feeling. It is the oldest and most powerful enemy a speculator will ever face. Impatience. It is a fundamental flaw in human nature. We are creatures of action. We are taught from birth that success comes from doing, from hustling, from being busy. To sit still to wait feels lazy. It feels wrong. The world praises the man of action, the go-getter. Wall Street, however, is a different beast entirely. It does not reward constant motion. It rewards supreme, almost inhuman patience. The public gambles. The speculator waits. The public feels the need to make a bet on every race. The speculator waits for the one race where the odds are overwhelmingly in his favor, and then he bets big. You think you are paid for trading. You are not. You are paid for your correct assessment of conditions and for the nerve to sit tight when you are right. The money is not made in the buying or the selling. The big money is made in the waiting. I learned this lesson not just through my own costly mistakes, but by observing others. I remember an old fellow in a brokerage office I used to frequent. His name was Partridge, but we all called him Old Turkey. He was a fixture in the customers' room, and the younger, quicker-witted traders often poked fun at him behind his back. He was old, a bit deaf, and seemed to move at a glacial pace. While the rest of us were chasing tips, scalping for eighths and quarters, and congratulating ourselves on our cleverness, Old Turkey would just sit there. A young man would come up to him and say, "Mr. Partridge, you ought to sell your Union Pacific. It's had a good run." Old Turkey would cup his ear and say, "What's that?" The young man would shout, "I said you should sell your Union Pacific. Take your profit." The old man would shake his head slowly, a faint smile on his lips. "No, my boy, I don't think so. It's a bull market, you know." And he would go back to staring at the board. Weeks would pass. The stock would climb higher. The same young men who had sold for a small profit would now be gnashing their teeth, trying to find a new entry point, or worse, selling the stock short and getting squeezed. They would approach the old man again, this time with a different tune. "Mr. Partridge, you should buy more Union Pacific. It's going to the moon." Again Old Turkey would cup his ear, listen, and give the same maddening reply. "No, my boy, I can't buy it. It's a bull market, you know." He baffled us. He never seemed to do anything. He just sat. But at the end of that great bull market, when the clever boys had long since taken their little profits and were mostly broke from trying to trade the wiggles, Old Turkey cashed in. He had made a fortune. He wasn't a genius. He didn't have inside information. He had something far more valuable. He had the patience to be right and sit tight. He understood the character of the market. He knew that in a bull market your job is to buy and hold until you believe the bull market is over. It was a simple, profound lesson. It was never my thinking that made the big money for me. It was always my sitting. Got that? My sitting. If you want to understand the true psychology of speculation, you must read the one book that defines the game. I am talking about Reminiscences of a Stock Operator. It is not historical. It is a permanent education in human nature and market cycles. The book is pure truth. Get your copy today. The link is in the description below. Now you listen to this story and you nod your head. You think, of course, that makes sense. But tomorrow, when a leading tech stock that you own is up 20%, you will feel that same itch. The voice in your head will whisper, "A profit is a profit. No one ever went broke taking a profit." That is one of the most pernicious lies in Wall Street. You will go broke taking a 4-point profit in a bull market. The small profits you take will never cover the inevitable losses that come from being wrong. The only way to win this game is to have your winners pay for your losers and then some. And for that to happen, you must give your winning trades room to run. You must have the patience to let a 20% gain turn into a 200% gain. Think about the market today. It moves faster than ever. News is instantaneous. Opinions from 1,000 self-proclaimed experts bombard you every second on social media. Every tick up is the start of a parabolic move. Every tick down is the beginning of the crash. This environment is scientifically engineered to destroy your patience. It creates a constant state of anxiety, a fear of missing out, that forces you to act impulsively. It turns potential speculators into twitchy gamblers. Let's say you've done your homework. You've studied the market, the industry, and a particular leading stock. You've determined that we are in a broad, bullish phase for the market, and this stock is a leader in a leading group. The line of least resistance for this stock is clearly upward. You establish your position at a sound psychological moment, a pivot point breakout. You have a plan. You know where you will exit if you are wrong. Now comes the hardest part. You do nothing. The stock moves up 5%. Your broker's app flashes a cheerful green number. The temptation to sell is immense. It's an easy win. You could tell your friends about it. But you resist. You sit. It climbs 15%. Now the financial news channels are talking about it. The experts are debating whether it's overvalued. Doubt creeps in. Maybe I should take some off the table, you think. But you consult your original thesis. Has the fundamental condition of the market changed? Has the stock shown you through its own action that the uptrend is exhausted? No, so you sit. It pulls back 7%. Fear grips you. Your profit is shrinking. Your mind screams, "Sell, sell before it all evaporates." This is the moment of truth. This is where the amateur is shaken out and the professional holds his ground. A normal reaction in a bull market is not a reason to sell. It's the price of admission for the big move. So you grit your teeth, and you sit. Then the trend reasserts itself. The stock pushes past its old highs and begins to accelerate. It's up 30%, 50%, 100%. The small-minded traders who sold for a pittance are now either watching from the sidelines in agony or, even worse, buying back in at a much higher price, just as the real move is nearing its end. But you, because you had the discipline, the intestinal fortitude, the patience to follow your plan and let the market do its work, are now holding a life-altering position. This is not a fantasy. This is how the great fortunes are made, not by 1,000 tiny, frantic trades, but by a few, well-timed and patiently held campaigns. Patience is not merely passive waiting. It is an active discipline. It is the patience to wait for the perfect setup, the one that screams opportunity. Most of the time, your wisest course of action is to be in cash, on the sidelines observing. The market does not demand your participation every day. There are times to be long, times to be short, and times to go fishing. Knowing the difference is the hallmark of a professional. The amateur feels he must have a position at all times. He is addicted to the action. This addiction will lead to his financial ruin. You must learn to be comfortable with being in cash. You must cultivate the patience to let the market unfold, to let the true trend reveal itself. Do not anticipate. Wait for confirmation. A speculator does not bet on what he thinks the market will do. He reacts to what the market is doing. He waits for the ticker tape to tell him he is right. I recall a time I was heavily short the market before the great crash of 1929. I had my position. I saw the signs of distribution at the top. The market was acting tired. Leaders were faltering. The easy money had been made. My analysis told me a great break was coming, but for days, for weeks, the market did nothing but churn sideways. It would rally feebly, then sag. My friends, my brokers, everyone around me thought I was a fool. "Jesse, cover your shorts. The market wants to go up," they'd say. The temptation to listen, to take my small profit and escape the mental strain was enormous. But my reading of the tape told me the underlying condition was one of weakness. The line of least resistance was beginning to point downward. And so I sat. I held my short line. The mental pressure was immense. It felt like holding my breath underwater. But I waited. And when the break finally came, it came like a deluge. The fortune I made was not a reward for my prediction. It was a reward for my patience in holding my position day after agonizing day until my judgment was vindicated by the market itself. Patience, you see, is the rarest of all virtues in a speculator. Hope and fear are your constant companions, and both are enemies of patience. Hope keeps you in a losing trade long past the point of reason, whispering that it will come back. Fear drives you out of a winning trade far too early, screaming at you to lock in the profit. Patience is the quiet, steely resolve that stands between these two primal emotions. It is the discipline to cut a loss without hesitation when the market proves you wrong, and the courage to let a profit run when the market proves you right. A stock operator has to fight a lot of expensive enemies within himself. He must conquer the foolish hope and the baseless fear that are a part of his human nature. He must learn to divorce his ego from his trades. The market is never wrong. Opinions often are. Patience is what allows you to accept this truth. It allows you to wait for the market to validate your opinion before you commit significant capital. And it gives you the strength to stay with the trend until the market itself signals the turn. Do not be the trader who plants a seed and then digs it up every 5 minutes to see if it's growing. Plant your seed in fertile ground at the right time. Then have the patience to let the season do its work. Water it when necessary, protect it from pests, but let it grow. Your job is not to force the market, but to flow with it. The market is a river. You cannot push it, but you can ride its current. Patience is the skill of waiting for that current to become strong and clear, and having the nerve to stay in your boat until you reach the sea. So the next time you feel that itch, that burning need to do something, stop. Take a breath. Ask yourself, am I acting based on a sound plan and clear market signals? Or am I acting out of impatience and fear of missing out? Remember old Turkey. Remember that the market will be here tomorrow and the next day and the next. The opportunities are not fleeting moments that you must grasp in a panic. The truly great opportunities, the ones that build fortunes, take time to develop. They announce themselves clearly to those who have the patience to listen. Your success will not be measured by the frequency of your trades, but by the quality of your decisions and the discipline of your inaction. The game of speculation is not a sprint, it is a marathon, and in this marathon, patience is not just a virtue, it is the fuel that will carry you to the finish line. Learn to sit, learn to wait. The market pays for sitting, not for thinking or for acting, it pays for sitting tight.